Hello traders and welcome to tradingfractals.com. My name is Kurt. I'll be your host today and forevermore. This is the inaugural video of my channel. I am camera shy and terrified of selfies, but here we are. This is an EMA trading cross strategy, of which there are thousands out there. What makes this one a little bit unique is I use a larger period size. So I'm using a 33 EMA and a 70 EMA, which is much higher than you're probably going to see anywhere else. So getting to our chart here, we have the hourly chart of the Canadian dollar, Japanese yen. Our yellow line here is the 33 EMA. Our saddle brown line is the 70 EMA. We are looking for a cross. After our cross, moving on the way up, we are looking to buy a retrace back to the 33 EMA. We have one main condition, and that is if price does reach the 33 EMA, we need it to have an upward slope. It doesn't have to be this steep, but it definitely needs to have a slope. We do not trade flat EMAs. So in this case, price is moving up very powerfully. It peaks out. As it moves down, notice the EMA is now flat. So I wouldn't be buying here. Price did pop 18 pips off of it, but it wouldn't be a buy for this system. One thing to note is as price is moving down, as these candles are developing, this one and say this one, the EMA doesn't really give you the true slope until the candles close. So in this case, say this little red candle, as price maybe is moving up and down during that hour, the EMA is going to be going up, down, up, down. So you're not really going to see the true slope until it closes. So keep that in mind, that you're going to have to monitor these opportunities in a live real-time setting so you can see if it's really flattened off, or because this is sort of in hindsight, and I am cherry picking examples here for just to show you the strategy. So in this case, we would not have a trade. Price breaks violently downward through both EMAs, continues down all the way down here. The cross takes place here. Now notice from the peak price to where the cross takes place, that's about a 200 pip move. And that's what makes this strategy unique, or this cross strategy, is that, that's a large move to get across. If you're doing a 10, 20 EMA or a 7, 15 or whatever it is, they're going to have crosses all over the place. And that's not the system we have here. So anyways, the cross takes place here. Now we're looking for a retrace and a sell back to our EMA. We get within 18 pips or so here. So we could put in a FOMO trade. That's up to you. We always have to be looking for confluence. There was that movie where they said always be closing. It was that Wall Street movie, I believe. So always be looking for confluence. Maybe you're into Fibonacci levels. Maybe you're into oscillators, the RSI, the MACD, whatever it is. I'm really big on monthly closes. So let me just pop over to another chart of the same pair, which I have kind of some labels on here. Notice here the 33 EMA, slope 2 flat. These purple lines are recent monthly closes over the last 3 months. So I put those on there. And so in this case, it would have really benefited us. If we come over here, when price moved through, there was a little dipsy doodle here. There's a little kind of pops off and then eventually moved through. As it comes down, it sort of bounces off. And it goes through, it comes back, sort of sells off. So it tells me that this monthly close has some meaning, has some good properties or characteristics of support and resistance for price action. So price moves down, and so as price moves back to the line, that might give us an impetus to have a FOMO trade, or scale in maybe a smaller position at first. Put in a small position and then have a waiting one up here. But either way, that confluence for me would give me, like I said, an impetus to make this sell trade. If you didn't, and it was a big winner, it was 80 pips down. So if you didn't, price moves down, starts to consolidate, moves back right to our line. Notice we still have a nice downward slope. And so that's a guaranteed 100% sell, a nice big sell off there. These trades, this makes your whole week right here. It's just that simple. So there's a definite trade there. We're not looking to have multiple trades like bounces off to 33. It happens, but I'm really looking for one trade off of it to get to that one good trade. Ideally, you like to see the retrace as fast as possible because it keeps the slope real steep, and I find those give you a better chance of success. Price moves back to the EMA third time, and it's completely flat, so we would have no sell trade here. Price blasts up violently through, and we get a cross here, and now we just the same thing. We'd be waiting for a buy on the retrace of on a retrace back to our EMA here. So in this case, completely flat by the time it gets back, and so we'd have no trade. We'd be looking for this big blast up and a real quick move back, and then bang, that's where we're looking for our buy. So in that case, no trade. But overall, that's a successful trade right there. So, and you can scroll back and look at what happens, and I encourage you to do that. Here's a cross here, price moves down, decent slope, boom, right on the line, sell, winner, right? And there's not many crosses. If you look on an hourly chart, you have to go way back. Here's one here. I like to see a little more separation, but it pops up. And here's a good example. The price moves really strongly down to our EMA, and so we're not really going to know if that was flat or not. It's kind of going to be moving up and down. Either way, it's a big winner on the way up if you did trade it, but you'd have to see these in real time to make that decision. Here's one here, another cross, comes down. We're looking for the retrace back in here. It never happens. By the time it gets back to our line, it's flat. We wouldn't trade it. It does move down, pops off there. And, would it give you an opportunity to have a tight stop loss, move it to break even, whatever. But for us, it wouldn't be a trade. So let's go back here. So we're going to do a lot of examples of this. I would encourage you to check out a link. I have a link for a trade simulator. It's completely free. It's called FX Blue. I'm going to do a video on that where you can just run the price feed and then just slap on the template that you like and just kind of see what happens. Just put it on there and just watch, just watch price, moving and see what happens after these crosses. I'm also going to do a video on this template and put up the template. So these little dots here are fractals. I found an indicator that you can adjust the fractals period. The one that comes with the platform, the Bill Williams fractal indicator, the period is 2. So you have dots or arrows all over the place. So 2 candles on the left side below the high price, 2 on the right. So you're going to have little things everywhere. On this one, the minor fractals are in yellow. That's 7 candles. So that's you need 7 candles on each side for a fractal to appear. These major fractals, it's 12, a period of 12. And you can set them at whatever you want. And I use that for my other strategy of trading fractal lines, and we'll have a video coming up on that. So I encourage you to look at this strategy, run the simulator, and we're going to do a lot more examples. I'm going to do a video of the trading fractal lines. I'm going to do a tutorial series on the Meta4 platform, which I love. I've been trading Meta4 since 2007. I've been trading stocks since the 80s, and I actually love it. I can't stand Meta5. TradingView, great platform. NinjaTrader, CTrader, but this is the one we're using here, and so I'm gonna get a video together and explain the template that I use, and that's what we're going to do. And I encourage you to check them out. Thanks for stopping by. If you find this useful, please hit the like button, subscribe, help me get this channel off the ground. I'm really excited to share what I've learned. I want to create a community of like-minded traders where we can create financial freedom one step at a time going forward. This is exciting stuff, and I'll see you next time.